Mr. Rana Kapoor, founder, managing director and chief executive officer of Yes Bank. Mr. Kapoor, morning. Thank you for joining us. I'll start with the very basic and a bread and butter question, which is that what are your deposit and credit growth targets, not for this year, but for FY13?
No, actually, the version 2 of Yes Bank is very well embedded in every nook and corner of the bank, as I'm sure you know only too well. We're well into the second year, and it's only proven that we are now about 20% ahead of version 2's financial commitments, quantitative commitments, and I think we're also very much on track on the qualitative commitments that we have made for version 2. So our deposit growth has been more than satisfactory at over 30%, lending growth including credit substitutes slightly in excess of that. So in terms of our ability to scale the organization, version 2 is about scale. How do we build execution, project management, competencies of people, bench strength of people to be able to scale an organization from a small to medium to large bank. So we are transitioning right now from a medium to large bank. And this is the beauty of what the management team in Yes Bank is doing. So we are right now on full throttle, turbo engines, to really convert the opportunity into building Yes Bank into a scalable institution. There are some risk issues, and we have to moderate some aspects of certain industry focus. And I'm sure that will be done by the team with some focus.
Dr. Kapoor, morning. During the third quarter, Yes Bank has grown savings account by about 99% a year-on-year basis, and the CASA deposit has grown a good 46.5%. Given the savings interest rate deregulation, what are your targets in CASA?
By 2015, we are deeply committed to achieving a 30% CASA. But most of all, more than the CASA, is the overall elements of the bank, because we have to see the connect between liabilities, as in CASA, and looking at the asset profile. If the quality of the profile is good, if the liability base is sustainable, and if we are managing our credit risk management well, it's only natural that over a period of time, Yes Bank will galvanize, mobilize far more deposits as we build a pan-India infrastructure. And like you said, today we have 330 branches. In the next 3 years, we'll be minimum 750 branches, if not 1,000.
Mr. Kapoor, in order to maintain the current growth rate of 30% plus at which the bank is growing, what will be your capital requirement for next 2 years? Because if you're growing, you will need more money to expand your balance sheet.
Fact one is that we are a high ROE bank, so our ROEs are 22 to 24%, and with the ability to leverage that, we can grow at 30% without raising capital, give or take. Beyond that rate of growth, we need to raise capital, and we will raise capital, whether it's 12 months from now, whether it's 15 months from now. It's definitely a program on the horizon. And it'll be a good program, anywhere between $400 to $500 million, at the right value, at the right moment of time, because capital raising is a very important event in a bank's life cycle, so we want to be correct on that.
Dr. Kapoor, your asset quality has been healthy so far. What is the future outlook for FY13? Also, you've got significant exposure towards the 2G telecom licensees as well. What is the impact of that?
You see, if you look at periods of time, see, this question is best answered if you look at a retrospect or you look at a forecast. If you look at periods of time which were high intensity in India between 2008-9 and let's say you can almost visualize March 2012. So over a 4-year period, Yes Bank has been the lowest risk bank in India. Lowest on net NPS, lowest on gross NPS, amongst the highest on provisioning coverage, both at a net level and at a gross level. But that doesn't mean the risk management can be taken for granted. Risk management is a day-to-day activity in our bank, as it is in every institution, because risk is the nerve center of a banking organization. You run a risk if you do something, but you run a bigger risk if you don't do something. I am from that school of thought, and the only thing I want to really add to that is that not everything is sensitive in every sensitive sector. In every sensitive sector, there are blue chips, and there are ones who manage their risk profiles respectively well. So the question of how you select your clients, how do you manage their risk nuances, and you stay with them, because you can't be in and out.
Glad to have you on the show, Mr. Kapoor, and I certainly hope to see more of you going forward on the channel.